James Knightley joining us now. He's Chief International Economist at ING. James, great to have you on the show. Thank you so much for joining us here on NDTV Profit. Since we're speaking at a time when I think top of mind is what's happening between Ukraine and Russia, do you see a clear fear of this escalating into an all-out Russia-NATO war? Because that's the concern, isn't it?
There is those concerns. There's certainly been a ratcheting up of tensions over the last week or so. Russia, for example, putting themselves changing their nuclear status in terms of their preparedness. But in the great scheme of things, there is this hope that Donald Trump will bring things together. It seems, that's what he's been telling us. So we'll have to wait and see on that. But certainly for now, the tensions have been increasing. We'll have to wait and see what he does when he comes in as president in January, on January 20th, and see whether he can negotiate a great deal for everyone.
James, good morning. It's also Samina joining in. Now, let's just break this down. I was talking to BlackRock a few days ago, and they indicated that the U.S. economy was in good stead even before Trump came into power. You had an improving labor market, you had improving consumption, and the fact that earnings are growing double-digit is convincing enough for anyone to believe that the U.S. economy is looking good. With that as your backdrop and Trump in power, where policies will be inflationary, how likely do you think is a rate cut by Fed in December? And I ask you this because global markets have been euphoric, or had been euphoric, on expectation of that trajectory.
Yes, I'm a little bit cautious on this, I have to say. We've got a weakening jobs market. That's undoubtedly the case. Payrolls growth is slowing quite dramatically, and 80% of all the jobs that the US economy has added over the last 3 years have just been in 3 sectors: local government, leisure and hospitality, and private education and healthcare services. Now, those tend to be lower paid than the median. They tend to be more part-time than the median. They tend to be less secure than the median. So I think to say that the jobs market is very, very strong is not quite as accurate as some might say. And I think going into this, we've got uncertainty about tariffs. Is there going to be a global trade war? That's a lose-lose situation for everyone in the global economy. And of course, also, he's talking about constraining migration to the US economy. Well, remember that the US American-born working population, it's already declining. If you then start shrinking the foreign-born workforce as well, that could be a real constraint on the growth story. So I think, just from the outset, I'm not so sure that the US is in as fantastic a position as some of the equity market investors are currently suggesting. So I still think there is a good chance that we will see a Fed rate cut, and it's largely down to the fact that inflation is looking better behaved, and the jobs market is cooling. That gives the Fed the room to start moving policy from very restricted territory to slightly less restricted territory. We're not talking about stimulative. We're just talking about easing a foot off the brake just a touch to give the economy a little bit more breathing space.
James, okay, so as the world or the Fed normalizes rates and Trump, of course, gets into action only next quarter, what does all of this mean for emerging market central banks or global central banks? Because this is not just about the US anymore, or never has been really.
No, I think, to be honest, the story here is that the US is probably likely to cut rates less aggressively than previously thought. So the Fed not cutting rates as far or as fast as markets had been anticipating. That's the market developments. But I think the risk is that everyone else has to perhaps do more. Because if we do indeed see a global trade war, America is, as I say, it's a lose-lose situation for everyone in the global economy. But the US is more insulated than most other countries. For example, the US, only 10% of economic activity is tied to global trade. In Europe, it's 30%. In Asia, it's close to 40%. So as a result, if we do see a tit-for-tat global trade war story coming through, I think there's going to be more pronounced weakness in Europe and Asia, and therefore the necessity for more interest rate cuts from those, even though the Fed is probably doing a little bit less.
Okay, James, I'm just wondering whether you have a view on what the rate cut cycle is looking like in India. It's being pegged as early next year at the earliest, or maybe by March next year. And any take on questions about the Indian economy right now?
I think, to be honest, I mean, within Asia, India is looking a little bit more resilient, much more domestically focused, of course, as well. And that certainly helps. So I think in general, we would agree that probably we will start to see some policy easing from next year. But the Indian economy so far, given its makeup, is looking a little bit more domestically orientated than some of the other countries, therefore a little bit less exposed to some of the risks that are out there for the more broader global trading nations.
Very quickly, how concerned are you about what's happening globally? Will that change the outlook in terms of risk on trade? Is this something you're concerned about?
Well, the world does tend to be pretty unpredictable, and with Trump in charge, it's probably going to be even more unpredictable. So, yeah, I think we have to be very alive to all the potential threats that are out there, and not be too focused on a trend and sticking to it. I think we have to be quite nimble as investors.